Good day, traders, and welcome to the Forex Master Class. Can you believe it? We are at lesson 3. And this lesson is so important because if you don't have it, you won't exist. But if you don't have it in terms of trading, then your portfolio won't exist. So it's very important that we listen to everything we have to say today. And let's get straight into it without wasting any time. Correct. All right, so let's first recap on what we learned last 10 days ago. Okay? If you remember, the first thing we started with was why successful Forex trading is like learning to ride a bike. We went through the 3 trading tools to build a successful bike. So trading tool number 1 was the only currency pairs you need to trade Forex. Don't worry, they haven't changed and they probably never will. Okay, they're timeless. These lessons that I'm showing you are absolutely timeless. So you can come back anytime you want. You can show your children, your children's children. They can show their children. Okay. Then reasons why you shouldn't trade minor currency pairs. The only currency pairs you'll ever need to trade Forex. The most traded currency pairs in the world. Trading tool number 2 was the only Forex price chart you'll ever need. The difference between up, down, and doji candlesticks. Is this all coming back to you? Well, it should. Know where the market is going with these 3 simple lines. That was trading tool number 3. Okay. Now, in today's lesson, we're going to focus on how to know your best time frame to trade the Forex market. But before we go any further, I think it's a wise start. I think it's wise to start out with the most important question you have right now, and that is, what on earth is a time frame? And I always like starting off with a strong definition. This way, after I've explained it, you can come back, look at it, and realize that it's not that difficult after all. So here it is. Okay. So a time frame basically shows you the market activity during a selected period. You can choose to view. Let me just say that again. A time frame basically shows you the market activity during a selected period. Okay? You can choose to view periods from tick, 1 second, 5 minutes, 1 hour, 1 month, yearly, and so on. Okay? So now let's break this up into easy English before we get to the charts again. So let's use 2 aspects to explain a time frame. Let's choose a time frame of, let's say, 1 hour, and let's use 1 candlestick to explain what I mean. All right. If you know what a time frame is, this is okay. This is revision. I also know what a time frame is, but I love going back just to confirm with my thoughts and analysis. Okay. So I'm sure you recall this picture in the last lesson. We discussed thoroughly what a candlestick is and why it's the best charting type to use. Okay, so here's your candlestick chart I showed you in the last lesson. You can see, you know that both candles have a body, okay, between the open and close. Okay, the open and close, and the open and close. And you know that the candlestick all has a wick. Okay, hold on, let me go back and let me just correct myself, because sometimes the candlestick high can equal the open, and sometimes the candlestick low can equal the close, and vice versa. Therefore, there is no wick in this case. It's just a body. Okay, so the wick is basically between the open or the closing prices and the highs and low. All right, so in this case, it's between the closing price and the high, and the opening price and the low for a green candle, which is the up candle. Remember, this is all coming back to you. Brilliant. Then we got the red candle, which means that the open is higher than where the close is, and the high is between the open, and the low of the candlestick is between the close. So this here is a wick. And obviously the candle tells you whether it's an up or down candle. Okay, and you know that the candle without a body, where the open is equal to the close, is the doji candle, the only Japanese term you need to learn probably in Forex trading. Okay, so right now you're 3/4 onto understanding how a time frame fits into place. So it's between the low and the high is where the time frame comes in. Now, I like to use examples. So here is a fictitious currency pair. Let's call it the USD FMC. Okay, so the United States dollar and the Forex Master Class is the currency pair. Okay. All right, so I'm just using this to explain very simply. So if the low of the USD the USD FMC is at 1.0002 pips, and the high of the candle is at 1.0090, how many pips are in between? This might be your homework, so be careful. Correct, 87 pips, okay? So there's 80 pips. And so you go 1.002, 1.0003, 1.0004, 1. Blah, 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 and all the way to the top where it's 1.0090 to make your life easier. So there's a lot of prices that's being jumped around between the candlesticks, okay? But for the candle to show the range between the pips of 1.0002 and 1.0090, it needs to show market activity. And by market activity, I mean the buying and selling of the currency pair at different prices. Okay? So for someone to buy a currency pair at one level and sell at another takes time, correct? From say 1.0002 to 1.0003, it takes time to buy it, and that's what I mean. So that's where time frame comes in handy. So let me just repeat that definition of time frame again. A time frame basically shows you the market activity during a selected period. So you can see the market activity of the buying and selling between the open and the close, and obviously the high and low, because where the close happened, already the high and low took place, remember? So this candlestick, and if we're using a 1 hour candlestick, will show you the buying and selling between the low and the high in 1 hour. Got it? And after 60 minutes of activity, what happens next? So after this whole candlestick has formed, what happens at the close? Boom! Another candlestick kicks in or conjures up. Okay? So the next bar starts its hour candle. And this is where you'll continue to see the buying and selling of the open prices of the new candle and closing price of the new candle. The buying and selling in this specific 1 hour candle is going to show you the buying and selling from 1 second or even 1 tick. Could be between 1 second that there was trading. And then 3,600 seconds later, it closed and it formed the candle, then the next candle is happening. It feels like I'm starting to repeat myself, but just so you can fully understand, I'm not going to go back here, okay? So don't worry. So after a number of hours, you'll get a chart looking something like this, like you've seen before, where there was an hour between this candle and all of these candles. Got it? So this is the hourly chart of the AUD USD. Remember the AUD USD? The Australian dollar versus the United States dollar, or against the United States dollar. So here's the chart. Each candle represents buying and selling activity in 1 hour. The more you get to know the time frames on a chart, the more likely you are going to find which one is best for you. Okay? And don't worry, that's not just the philosophy for the day. We're going to find out today, hopefully, what your best time frame is. So finding your best time frame uses 3 simple tips. So, shall we get to it? Time frame tip number 1. How many trades do you want to take a week? So answer this in your head. Do you want to trade 3 trades a week? Do you want to trade 1,000 trades a week? Trust me, I've seen that trading in a day, okay? So it is possible. Do you want to take 1 trade a week? Or do you want to take 10 trades a week? Well, I guess you'll find out in the next couple of weeks when you sit down and you take your own Forex trades, whether it's live or demo account, you are going to find and enjoy this journey on finding your perfect time frame, okay? I'm just going to give you tips on how you can do just that. So I personally enjoy trading around 1 trade a week. So I fall under this category. I like 1 trade a week. I've got a lot of work to do. I've got a lot of presentations and seminars and all these things that I like to do in the week. So I like to balance my time. So 1 trade a week is good. And also it's not just 1 trade. It's 1 high, very probability trade to make sure that my win rate is high. Okay, so just a quick note. During later Forex Master Classes, I'm going to show you how to trade, using proven Forex strategies. These strategies I recommend will work on any time frame, which is why I believe that this Forex Masterclass is the most versatile trading training course on the market today. So I'm not going to be telling you which time frame is for you. You're going to find out. But the Forex strategies I'm going to show you work on all the time frames in the world. Right. So how do you know how many trades you'll take? Here's a general rule you can follow. The higher the time frame is, okay, the higher the time frame is, the less trades you're likely to take. The lower the time frame, the more trades you'll take. And I'm going to explain this a little bit better, but first let's start off with the charts. Okay, so here's that chart 1, which is the 1 hour time frame of the AUD USD. And then you can get the second chart. So this is a 1 minute chart of the AUD USD. And then the third chart is a daily AUD USD. Okay, so let's go back to number 1. So the first chart, you're seeing an uptrend of the AUD USD as there are higher lows and higher highs. So take your finger from here, okay, move it all the way up this way, and you'll see that the overall trend is up. Chart number 2. This is a minute chart. Now the minute chart of the exact same currency pair, you can see that the predominant trend for the Australian dollar is down. Look at this. Excuse me, it's sideways. Not down, it's sideways because it's going from a certain range, from high to low. Excuse me about that. So you can see that there is a sideways range between the AUD USD, because look at the high, look at the low. They haven't surpassed those levels, and therefore you can draw a horizontal line and you'll see that the overall trend is sideways. And if it breaks up, the overall trend is up. And if it breaks down, well, you can guess that. And then finally, the third chart, in the daily AUD USD, you can see that the predominant trend for this chart is, correct, down. So draw a downtrend line, or use your finger and take your finger here and say, look at this, lower high, lower high, lower high, lower high. Okay, you can see it's broken out a bit, but it hasn't confirmed yet as a uptrend. So the overall trend is down. Excuse me. So this is how you can implement trend lines and time frames on a chart. So you can go to any time frame now, or any chart, or any currency pair, and take your finger, draw it from up and down, down or up or sideways, and you'll tell exactly what trend line is on that chart. And there's 3 different charts showing 3 different directions, and yet there's money to be made on each one of them. Do you see that there are a whole world going on between the hour chart? There's a completely different world going on in the minute chart, and there is a opposite world on the daily chart. And you can make trades on every single one of them. So again, it depends on your time frame. And look how similar they all work. If I said this was an hour chart, you wouldn't know the difference. If I said this was a daily chart, it wouldn't make a difference, because these charts all work pretty much the same with demand and supply. Okay? Excellent. So let's go back to chart 2. Chart 2 is that sideways chart. If you look at the minute chart, you'll see that the number of trades lining up between 1425. Can you see that here? No, it's too small. So let's go here. Let's go to 1425, which is around this level. Okay, up until 1630. 1630. So let's see. So that's all the way at the end. Okay. This means that you could end up taking 2 or 3 trades in a day. All right, if the strategy lines up, and if you find the 1 minute chart to be the best time frame, then look at this. You can take 2 or 3 trades in one day. This is not even a couple of days. This is from 2:30 to 4:30, and look at the market activity that took place. Okay, so a short time. So then you got to ask the question: is what is a short time frame? Is it just 1 minute? I would say that if you're a fast and aggressive trader who wants to trade on adrenaline, and you have the time and day to take these crazy trades, then by all means, in a short time frame, I would say starts at around 1 second all the way up to 15 minutes. Okay, so anywhere between that, I would consider a short time frame. Personal opinion, because there aren't actually rules and not specific definitions. Just like there's no specific definition of what a galaxy is, there isn't a specific definition of what a short time frame is, long time frame, but you can estimate. Okay, but as I mentioned before, you need to take your time to find out what time frame suits you. So now let's look at the chart number 1, the hourly chart. all right, there's probably the same number of candlesticks as the minute chart, okay, but the candles are spread over a lot longer time. So you can see from 12 o'clock, then there's another 12 o'clock, and there's 5 o'clock, 11 o'clock, 5 o'clock, 11 o'clock, 11 o'clock. So you can see it's spread over a number of days. And you can see maybe it's 3 days worth of days that the market activity spread over, and yet it's the same amount of candles as what I showed you in the minute chart. So this means that maybe 1 or 2 trades could line up over those 3 days worth of market activity compared to 2-3 trades that line up on the minute time frame. So if you're more conservative like I am, then you probably should be looking at the longer time frame, so 1 hour to 4 hours. And you'll find that you'll get less frequent trades, so you won't be rushed to go into the trades. You'll be able to see trades lining up from a couple of hours, before, and you'll have the time to analyze and find the best trades. So my favorite time frames are around 1 hour, 1 hour. Let's just see this. So my favorite time frame is about 1 hour and 4 hours. Okay, many traders trade, they don't like changing their lifestyle too much, so it must suit your lifestyle. That's the most important thing. And because I have a busy schedule and responsibilities in my life, I can't focus every second of the day on trading as much as I'd love to. And so 4-hour chart, I can look at what's lining up in the market. I can give it a couple of days, and it tends to do well. Okay, and with a time frame like this, you'll get around 1 or even 2 high probability trades in a week, just the way I like it. So now let's go to time frame tip number 2. Just like I mentioned with my lifestyle, you need to know your lifestyle. You need to know your lifestyle in order to find your ideal time frame. So many traders wish to trade without changing their lifestyle. Okay, maybe they decide after working hours in the middle of the night, first thing in the morning or during their lunch break at work. So the beauty of trading is that you can choose your time frame based on your lifestyle. So if you're busy at the office or at work, or you don't have time to look at a screen every 10 minutes, then a longer time frame will suit your lifestyle. All right? I mean, think about it. If you look at charts using a daily or weekly time frame, then you'll only need to look at the prices at the end of the day, because you need to wait a whole day for that market activity to complete in one chart, correct? Before you jump in the trade. And by looking at daily time frame, you can get back from work, you can jump on the couch before your TV program starts, and you can look at charts for a few minutes a day. In those few minutes, you'll see what's lining up for the next day, and why the next day, because you're looking at a daily time frame, and at the candlestick closes, it'll only open the following day. So it does give you time. Then you'll see if a trade's lining up on that daily time frame based on your trading strategies. And with a longer time frame, you can focus on your job, your love life, your kids, or just doing what you love. Okay? Let's go back to this picture. So just a quick note, in the next couple of weeks, I'm going to introduce you to the most powerful Forex strategies I've ever come across. And that's why you need to find your time frame before we get there. So you're nearly there. You're nearly there, my friend. You're almost ready to start taking your first Forex trade. I just have a few more essentials you need to have in your arsenal before you take that next big step. But if you're semi-retired or you have the time in the world, like you have all the time in the world, then you know what would be better for you? Shorter time frames might suit your lifestyle. So for me, longer time frames suit my lifestyle. Maybe shorter time frames will suit your lifestyle. And you know what? I was there once upon a time. My eyes were glued to the screen with trading. I spent almost 5 hours a day looking for quick, profitable trades, looking at those 9 currency pairs that I showed you in the past lessons. And you know what? I was trading shares, CFDs, indices, commodities with the same strategy, okay? And I waited for each and every setup for the day, just following one strategy. It was great. It's amazing. I would do it again in a heartbeat. But the thing is, I don't have the time, so I have to adjust it to my lifestyle. And if your sole goal is to trade for a living and glue your eyes to the computer screen, then the strategy I'm going to reveal to you is going to work just as well. Okay, the only difference is you're going to be making quicker profits than what I make on a weekly basis. And it seems like these are the only two tips that you need to find your ideal time frame, right? But I still have one very important tip for you. And that is, you need to know how much capital you have to trade, all right, before you choose your time frame. We need to break this down. We need to break it down into two types of time frame, and that is short and long. By short time frame, I mean, let's say under 30 minutes, maybe 1 minute to 15 minutes or 30 minutes. Okay, let's say 30 minutes. And by long time frame, I'm talking about 1 hour up to daily, okay? Why not longer than daily? A weekly time frame, I find absolutely ridiculous to trade Forex, because you don't want to hold on to a Forex trade for more than 3 weeks when you're dealing with a huge market that anything can happen. And can you imagine the amount of pips that the trade has to go through in order for a trade to line up in a weekly time frame? So if you are looking to invest in Forex, I'm not your guy, unfortunately, and that's my strong view about it. So just watch out with the weekly time frame. But what if you decide to trade longer time frames, such as 4 hours or 1 hour? Well, you need more money in the case, okay? Because what if the trade turns against you? You have more. You have to risk more money, because the amount of market activity that takes place in 1 hour to 4 hour is a lot higher than the market activity that takes place in between a minute chart. Okay, so you can see that in an hour chart there is around 50 to 100 pips on average that trades. All right, more or less. And you can see that in a 5-minute chart there is around 5 to 15 pips that trade or have buying and selling between each candlestick. So if you want to risk, say, 5 Rand per pip on a 4-hour time frame, and the market goes against you 50 pips, that is a 250 Rand knock. Okay? If you trade using a 5-minute chart and the market goes against you 10 pips, and you are also risking 5 Rand risk per pip. Remember, when your charting platform opens, it will tell you saying, how much do you want to risk per pip? That's if you're spread trading. Alright? So we're dealing with spread trading right now. So if you're using a 5-minute chart and the market goes against you 10 pips, then your portfolio will be down 50 Rand. So 10 pips times by 5 Rand risk per pip gives you 50 pips, 50 Rand. So, but don't be scared about small losses. In the next couple of lessons, we're going to cover the most crucial money management tools and rules you'll need to make sure you never blow your account, and I'm going to explain in greater detail. So if you follow this part of the program diligently, I'll make sure that you never ever take a big loss. I'll make sure about it. But going back to the amounts of money that you need to start trading longer time frames, with real money, I personally would start with a minimum of 5,000 Rand. And if you'd like to grow your portfolio a little bit more quicker, then I would start with 10,000 Rand portfolio. Okay, but hold on, before you run away, I understand that things are getting tight in this country and things are getting a little bit difficult. So if you don't have that money lying around, but in your mind you know you will, like you got it, you've got those ideas, you've got those business ideas, you're going to grow your portfolio, your retirement nest egg, you've got ideas, right? And in other ways. So trading is one way, but you've got other ideas. So that 5,000, 10,000 Rand is going to be there. But if you don't have that money just yet, then I personally, you can literally start with 500 Rand trading the markets, or even better, 1,000 Rand startup capital will do just fine. Because 1,000 Rand, I mean, it probably will fill a big SUV car, if you think about it. And then you've got that 1,000 Rand in your portfolio, and you're never going to blow that money, because I'm going to show you whether you've got a 1,000 Rand portfolio, whether you've got a 100,000 Rand portfolio, or whether you've got a 8 million Rand portfolio. It honestly doesn't matter. I'm going to show you how never to blow your account, how to take your small losses and not even feel bad about it, okay? And you're going to do just fine. Okay, so with a 1,000 Rand portfolio, if the Rand risk per pip is, say, 1 Rand, and you risk those 10 pips, then it's a 10 Rand loss. Big whoop, right? You'll need to take 100 losses in a row to blow your account with 10,000 with 1,000 Rand portfolio. Okay? 100 losses in a row to blow your account. But let me warn you, if you take more than 5 to 7 losing trades in a row, you need to write this down. You need to tell me. All right? Go to the Investors Club, assign to me, all right, assign my name, Timon, and say, hey, I've just taken 5 to 7 losing trades in a row. This is my strategy. Can you help me? I promise you we will work on it. I will help you improve your strategy, because through my 12 years of trading experience, the biggest losing streak I've ever had was a little bit more than 7 losing trades in a row. It was 12 losing trades in a row, okay? And it was back then when I was guessing and I was thinking about the strategy and I was skipping trades. But that was a long time ago, and I never blew my account. I was never down more than 25% of my portfolio. So don't worry about those losses, okay? But I know that after 7 losing trades, there's something going on. You've entered a drawdown. So let me know. Be warned. If you start out with a minimum capital, then stay well away from weekly time frames, because there are going to be so many more pips that a candlestick's going to go from open to close, that if it's 1 Rand risk per pip and you start off with 500 Rand and it goes against you 300 pips, that is 300 Rand of your portfolio that you started with 500 Rand. So please avoid the weekly time frames. Got it? Excellent. You now have the 3 most essential time frame tips you need to trade Forex, and you got to admit it wasn't that bad, right? You know what a time frame is, but and it's very easy to grasp once you get the hang of it. And we're going to show you a lot of lessons. Excuse when I say we. I don't like saying I don't know why, but maybe I've got a bit of a personality split, or I feel like I don't want to be too egotistical. But anyway, before I digress, it's very easy to grasp. I'm going to show you so many examples. We've got lots of lessons to go through, okay, so don't worry. But let's just recap quickly on what we've done with Masterclass number 3. So the first thing is we realize, what on earth is a time frame? You now know. We went through time frame tip number 1. How many trades do you want to take in a week? We went through time frame tip number 2, know your lifestyle and you'll know your ideal time frame. And tip number 3, know how much capital you have to trade before you choose your time frame. And you know what? Let me just say this. If you don't have that 500 Rand to trade just yet, use that demo account that I was telling you about, the Oanda, oanda.com. Go to that demo account. You'll have a demo account forever. Practice as long as you want. I don't want you losing money unnecessarily if you're still getting to grip. So get that demo account. Let's get to it. Show me trades that line up. Brag about the trades that you take. All right. In the next couple of lessons, obviously, with the strategies I'm going to show you. Okay. And then I don't mind. It's not about the money you make. It's about the consistency. It's about the hundreds of trades that you take. But more importantly, it's about the passion and the commitment you have to trading Forex. You can feel the passion burning inside. If you are still listening to me, the passion is there, and I couldn't be more happier. Okay? I think you're ready for the next step. You're armed with the trading jargon, with the tools. You need to, you know how to plot on a chart. You know how to find the best time frame, and now you're ready to bank money and monitor each and every position that comes your way. So in the next lesson, you'll need to read, digest, and lock in exactly what I'm going to show you. All right? I'm going to show you 3 of the most powerful, important money management lessons I've learned in the last 12 years. And it works with Forex, CFDs, indices, commodities, warrants, bonds, futures, ETFs. It works with absolutely anything with a chart, except a heart rate monitor. I've tried it. It didn't work. But everything else, it works, okay? As long as there is liquidity, and as long as there are trends, and as long as there is demand and supply, it's going to work, all right? They are timeless, and they are going to be all yours in the next lesson. You're going to use them with every single trade that you ever take, so make sure you're ready for this essential lesson, okay? And remember, if you have a question, then ask me at the Investors Club. investorsclub.co.za, that's investorsclub.co.za, assign my name, start with a question with FMC, which stands for Forex Master Class, so I know exactly which to prioritize. Don't tell everybody else, okay? But I will prioritize if you say FMC, and I'll be sure to answer your question within 72 hours. So that's about it for today. Have a fantastic 10 days. It's really nearly time to make money. If you've absorbed everything I've told you about in the last 3 lessons, and you have the insight now to start trading successfully, then in 10 days' time, you're going to have those money management rules, and then we can start with the Forex powerful strategies, okay? And basically what you're going to learn are trading techniques that many traders with 3 to 4 years of experience have yet to learn. So until then, enjoy practicing your Forex account. Find your time frame that you like looking at. Go answer a couple of questions. Go do your homework and just find yourself with trading. And then I'll see you in 10 days' time. And always remember, wisdom yields